Welcome to the CIY Capital Daily NQ Recap. We're going to break down what really drove the market today, March 18th, and get you all set for tomorrow.
So, the big story today, it was all about this huge tug-of-war, right at the 25,000 line. The market tried to rally, it really did, but then a 1-2 punch hit. First, we got news that prices for goods are rising faster than anyone expected. Then, the Fed basically came out and said, nope, don't expect any rate cuts soon. That combination just spooked everybody, and the sellers completely took over. The bears definitely won today's fight.
All right, so let's map out the battlefield. If you're trading the NQ, these were pretty much the only lines that mattered today. We'll mark them down so you can see exactly where the big moves really happen.
Now look right here at this level, 25,210. We're going to call that the ceiling for today. This is the exact spot where sellers showed up in a big way and just slammed the door shut. When the market hits a ceiling that hard and bounces off, that is a huge signal. That's the key level you got to watch to see if the sellers are still calling the shots.
Okay, now let's pan all the way down the ladder. Way down here at 21,680, we have what we call the big floor. This is the absolute line in the sand the bulls have to hold. You have to remember, the market is already down a full 15% from its recent high back in February. So if this floor breaks, well, that could mean a much steeper drop is coming. This is the level that matters most for the bigger picture. You know, the NQ never trades in a vacuum. We always have to check in on the neighbors, and today they were definitely putting some heavy pressure on the market.
So here's how it all breaks down. First, government bond yields are up around 4.25%. Think of that as safe money, you know? When yields are high, investors can get a pretty good return without much risk, and that makes them way less willing to bet on high-flying tick stocks. At the same time, that disruption in the Strait of Hormuz is keeping oil prices high. Higher oil means higher costs for, well, pretty much everything, and that's just stoking those inflation fears. That 1-2 punch is acting like a huge anchor on the NQ right now.
So you see all this happening, how can a trader actually build a plan around today's action? Let's just walk through a quick blueprint. This is the kind of setup that shows how you can turn all this analysis into a clear, repeatable system.
The most important part is having a system. This is exactly how Ron Rose teaches risk management. You define your entry. In this case, it was based on that hard rejection at the ceiling. You set a stop loss right above it to protect your capital, and you have a clear target for your reward. It's all about having a plan before you ever enter the trade.
Building that kind of disciplined system is the hardest part. And you know, it looks different for everybody. Whether you're just starting out and trying to learn the ropes, or you're a pro looking to sharpen your edge, or maybe you're managing a small account where every single tick matters, the principles of a solid plan are totally universal.
And that's really the core focus of the one-on-one coaching here at CIY Capital. Ron works with traders to build a personalized plan that not only fits their goals, but just as importantly, fits their life. If you're interested in learning more about that whole process, you can find all the details at CIYcapital.com.
And that's our breakdown for today. Now remember, this is for educational purposes only. It is not financial advice. For more analysis like this, head on over to CIYcapital.com or follow @Ron Rose Trading on social media. We'll see you tomorrow.